Begin by getting a sense as to what the outlook is in terms of the overall inflationary impact, the fact that the rupee as well is still hovering above that 80, around that 80 mark to the US dollar. How is this impacting the overall company's financials?
Yeah, good morning to you and your viewers, and thank you for having me here. So we see the inflation impact in the geographies we operate. So people are a little tentative, but it is improving month or month. So we being a value player, our average price point is $35. So, and what we are seeing, and we have seen historically as well, so people jump to these value whenever the offering is unique and innovative. And we see that trend in the past few months. So while Q1 was negative for us, Q2 is already trending as flattish positive. So we are in line with our full year guidance of mid-single digit for the year. So, but yes, having said that, we do see muted demand across the geographies. So people are a little tentative. So it means that we are actually working harder to provide new and innovative products continuously at compelling prices. But yes, we are seeing the month-on-month improvement and in line with our guidance for the year.
Vineet, when you
In
guided,
terms of rupee,
Vineet, there was no morning, Nikun joining. When you guided the growth, there was no problem in Europe. Now there is a problem in Europe. The mood point is it is eat or heat. Europeans right now are struggling with energy prices and cost inflation like never before. So do you think in this kind of a scenario, discretionary spending will take a backseat? And if discretionary spending takes a backseat, whether it is trade down or whether it is going down the ladder, ultimately discretionary spend will take a hit. How will that affect your business?
So Nikunj, we are not a pure discretionary spend in the fact that we, besides jewelry, we also sell a lot of non-jewelry products. So 1/3 of our revenue comes from non-jewelry products. So while in summer we would have supplied a lot of fans to the consumers, in winters we'll be selling blankets as well. And our vertically integrated supply chain gives us two advantages. One is quickly resorting to changing consumer behavior. In such times, it is pretty high. And at the same time, we provide them great compelling value. So price point, the value positioning which we have, we do see impact in such inflationary kind of a scenario, but it is much lower than other players is what we have seen historically as well. So when we guided, so in the beginning, like in the Q3 or Q4 of last year, we were aiming at a mid-teens kind of a revenue growth, but because of inflationary scenario, in Q4, we guided for a mid-single digit. And while the inflations have peaked post that, we are in line with our guidance and we reiterate that for the current year.
So can I say FY23 will be a year of consolidation for Vaibhav? It's not going to be as bumper as what you had immediately after COVID. And this is the year when your German investment will take time to settle and growth in a sense will get rediscovered. So FY23 is all about consolidation, not about anything exceptional.
So it is consolidation, but we are gaining rapid market share as well. So while Q1 was negative year on year, but that was on a very high base of Q1 of last year. We had COVID tailwinds of 2 years in Q1 in the past 2 years. So one also has to look in perspective with that. If you still look at CAGR in Q1, while we were negative year on year, but CAGR growth for the from FY20, we were still growing at 13% per annum. So we continue to build our momentum. The year-on-year growth this year will be softer because of two factors. One is this inflation, and the second is because the economies have now opened up completely. Last year and the year before, we had Gobal tailwinds, so we now are seeing a little bit of headwinds in that matter. But a mid-single digit growth is still very robust, keeping that factor in mind. For the medium term, next year onwards, we have given our mid-teen guidance. We are pretty confident of that. So we are gaining market share both in US and UK geographies, and Germany is also ramping up quite well. So to give maybe, so we gave a guidance of breaking even in Germany in H2 of next year, and we are absolutely in line with that. So in Q1 we did about 2.6 million euros of revenue. In Germany, we are growing quarter on quarter by about 35% in this quarter in Germany. So all in all investments which we did in the last year have started yielding results. It takes time to build up, so it is not going to come in one quarter. but that's where our guidance of mid-single digit for this year and mid-teens for next year is based on.
Assuming uptick because of Christmas, which will get captured perhaps in the next quarter because that is the bumper quarter for you. Are you expecting an uptick coming in?
So Q3 is peak season. It's the gifting season, and sales always go up in that period. But we have a lot of seasonality in our business. So what we look at, and we also urge everyone to look at, is the year-on-year trends, because that's what matters in this changing seasonality. So like I mentioned, we are already flattish positive trending in Q2. Q3, we expect that momentum to continue. Our quarter-on-quarter sales will be up largely, but we'll grow year-on-year as well in Q3 and going forward from there.
Good morning. Another question I wanted to ask you was, and it's something that you've spoken about back in 2009 when you pivoted and how you used deep discounting, right, to grow your business, to get volumes, etc. So in the environment that we are in today, when there's so much chatter about will it be soft landing, hard landing, growth recession, and with the kind of exposure you have overseas as well, will you go back to the model of 2009, once again, look at deep discounting and things like that?
So we have continued that model. So the model which you see presently is the same model. So the price point of $35 in jewelry and non-jewelry segment offers deep discount, high value to the customers. And we have seen it works good in all kind of economic cycles. So we have seen that in the subprime crisis year. We have seen that in the initial COVID period when people were tentative. But they come back. They come back, and when they see good products at great value, they jump on it. That's the trend we are seeing presently. So we continue with our value positioning. We continue with our under 20 and under 10 days. So every Tuesday is all items are offered under $20. Every Friday is under $10. So that's a huge value to the customer in such scenario of inflation and recession where a lot many things are out of bounds. They shop more on such kind of a products, and we expect that trend for the coming quarters as well.
And the higher volumes that you were speaking about to Nikunj and the higher market share, etc. Can I ask you, are you getting that a lot from traditional TV, or is OTT the new one? Are you going to bet more on that? Because you on ground will be able to tell us what is better for you in terms of monetization, what's working better for businesses.
So both actually. So TV, our market share is still very less. So we have less than 3% of market share. So we have a huge runway, and we are investing a lot. Last few quarters, we have mentioned that in all our investor call as well. So we continue to invest in OTA homes quite rapidly, which will fuel the TV growth in many years to come. So huge runway in front of us for the TV business as such. But web will continue to outgrow TV. So our own website revenue, marketplace revenue, OTTs, we are investing a lot into that web and OTT domain as well. And we believe our web revenues will continue to grow faster than our TV revenues, and web mix will continue to improve in the coming quarters and years.
Okay, so let's see how all of this pans out. There's, of course, the busy festive season that is also coming up, whether here or overseas, Christmas, Thanksgiving. You've given us all of the trends. Let's see how all of it pans out. Thank you so much for being live with us, Vaibhav Global. In the last 1 month, this stock is higher by 30%. But if you look at the year-to-date kind of returns, it's negative, and negative by about 30%.